The market naturally experiences rises and falls. These fluctuations are a normal part of a healthy market. The key point here is that short-term declines are common and don't necessarily indicate a long-term problem. This is why the experts will always tell you if you are not in for the long term, then don't venture the stock market. Let me prove to you with an overview of how the S&P 500 has performed over the past 5 years. If you take a close look at the chart on your screen, you realize that over the past 5 years, that is from 2021 to 2025 today, the S&P 500 has been on an increase over the period, even though there are periodic ups and downs. And that is exactly how the stock market works. There will be daily ups and downs, but if you are in for the long term, you will think more long term, and you realize that even though there will be days you get more, there will be days it will be in negative, but at the end of the period you are investing for, you realize that your investment will still rise. On the other hand, if you look at the second chart on your screen, indicating the last 6 months of how the S&P 500 has performed, you realize that it has always been on the downturn. This is indicating that from November up to this time in April, the S&P 500 has not really performed well. That does not mean that it's not performed in the long term. This has just been a short-term dip. Here is the key. Just because it is down today doesn't mean it stays down forever.